Hello, everybody, and welcome to episode number 93 of Confessions of a Market Maker. I'm your co-host, Ray, aka All Day Ray, aka Daddy Warbucks, and I'm joined here by my dapper co-host, former market maker, 20 years, and current day retail trader, a man some people are now calling a creative genius. The candlestick charts he's creative have been deemed classic works of art. The man who can make a phone call that would end world poverty. JJ, how's it going, man?
Good, brother. It's quite an intro. Holy man, you firing on all cylinders this morning. How you doing?
I'm doing good, man. I mean, JJ, I gotta live up to your reputation, man. Like I feel obliged. Um, but yeah, man, we're coming off a fun podcast we did with Tim Grattani. You know, it was funny too,
Hmm.
JJ. I didn't bring it up to him, but some people, like, when we're prepping for it, some people are calling him like one of the best retail trader of all time. Like, I don't know whether or not he is or not, but definitely great track record.
Oh
Um,
yeah.
Very humble guy too. Humble, gracious, smart.
Yeah, I
Um,
was I was impressed with his humility.
yeah, for
Um,
sure. And I thought it was neat too because he had, his early day success was those OTC stocks. Um, which most people get burnt on, right? And especially, obviously you have experience on the other side of doing it, to trap in retail traders. So I thought it was interesting from that aspect. What did you take away?
no, I think it's pretty funny that the deal that he made his first hit on was a promotion done by a group of guys that I had actually trained.
Mm-hmm.
So and I'm glad that he out of the I don't know probably $5 or $6 billion that those clowns stole out of retail people's pockets, over a 4 year period. I'm glad that he was actually one of the ones who profited, because those guys they laid a trail of destruction that I would just be sitting there watching these deals going, oh my God, I just created like a virus that spread through the financial community by teaching these guys things. And they just went and used it like for like the most evil purpose in the world, which is, I mean, that's finance, right?
Yeah.
But I'm just glad to see that somebody made money off of their deals, right?
Yeah. Yeah. Well,
You
like,
know.
by getting on the right side of it. And,
Hmm.
that's something since we've started this podcast, you've preached of, especially me. Like, I think back to my early days of learning when we started all this was, okay, let's get on the right side. Like, what's the big money doing, or what's, the person, maybe manipulating the style. Like, what is his intention? What's the agenda? What's the narrative? And it seems like that's something he was picking up on, like, in his early days. So,
Yeah, no, he got it. He was lucky that wherever he learned, his craft was good, and he was also, I think, the one thing about him is his ability to admit when he's wrong, which is a
mhm,
hard thing for a lot of traders to deal with,
sure.
especially retail traders, because when you start on a trade desk, you're pretty much you're basically whale poop on an iceberg. You're not treated like you're like the hey idiot, go get me a coffee. Hey idiot, that's how they talk to you. So you don't get an inflated ego, right?
Yeah.
But in retail trading, it's very hard. You're sitting in a room by yourself.
Hmm.
You don't have you start taking trades, and there are a lot of things people will do when they're by themselves. If they were on a trade desk, you'd get a shot in the head. They'd go like, "What are you high? What are you thinking? Why are you doing that?"
Hmm.
And that doesn't exist. So it's very harder because there's no checks and balances. You have to check and balance yourself, and that's a hard thing. I've always said retail is the hardest thing I've ever done because you can't cheat. You
Mm.
know?
Yeah. Yeah. You're absolutely right. It takes a lot of different skill sets.
Yeah.
If you really think about it, JJ, you also had a chance you were a guest, not on a podcast, but a Twitter space,
Hmm.
which they seem very popular. Michael Gayed, we had him on the podcast earlier this year.
Yeah.
Very smart guy. I enjoyed listening to it very much. How'd you like that experience?
Oh, I loved it. He's a great guy. it's um, and there were some good questions on there.
Mhm.
it's nice to. I really like being because it's been a while for me. Being around professionals. And it's kind of like guys like that are the guys that I kind of grew up with
Hmm.
in the industry. So I feel very much at home with them. You kind of know what they're going through. They know so it's kind of nice. It's very and he's got some great people on there who ask questions, and he's a sharp dude too. So it was a pleasure being with him.
Yeah, yeah, it was great listen. For the listeners, if you guys missed that, go back and listen to it. Michael Gayet. I know he archives
Hmm.
the in podcast form now. They're originally Twitter Spaces, but I'm pretty sure he archives them. Uh, was just a good discussion just on you guys were talking, and this is stuff you've been talking about for a while now, JJ, but that big money not getting the use. Um, explaining maybe some of this movements while we'll have days where we're just like ripping and people are just like confused because we're supposed to be in a bear market. But he goes over all
Oh,
those things. I think it's a great
yeah.
conversation.
Yeah, it's true. Yeah, it's nice to get that perspective, and it's also nice to talk to a money manager and hear what they're thinking, because we have all these theories about what they're up to. So it's kind of
Mhm.
nice for him to, like, I mean, are you guys thinking this? And he'll go, yeah, no, or he'll go, yeah, we are thinking this, or you're out in left field. And it's always nice to have
Yeah.
that as a resource.
Yeah, I mean, and it seems like you've been pretty spot on. At least some of the things you were saying, and he was concurring with you on a lot of those points. So that was cool to see. All right, listeners, JJ and myself are helping people get funded through Apex and Top Step futures. If you pass their evaluation, you can get funded to trade up to 100K or more. You're going to get JJ supporting your attempts to pass the evaluation, plus a live trading room with members who are already funded to assist those in their efforts to pass the evaluation. Join a supportive and professional community of traders at microefutures.com. JJ, so this is our first time mentioning this on the
I
podcast. Pretty neat deal we got going on here, huh?
it's I really like these funded trader programs. Apex and Top Step have been good to the members of our room, and it allows people. One thing it does is it enforces discipline. The other thing is, you're trading with OPM, other people's money, which is always very nice. you know and uh you know it's a great way to start developing. We've had one guy now, he trades a bunch of these accounts, and he's a six-figure trader. He's making 5 6 figures every month. We had one of our guys who just did his first $30,000 month. You know and we've helped 200 people pass these evaluations and get funded. It's really nice, it's very rewarding, and it's, of course, it's not easy, but with discipline and putting in the work, this takes some of the pressure off you, where you don't have to go get a mortgage against your house to open a trading account. Which I don't recommend, right? I do not recommend doing that. Trading takes a long time, and this enables you to learn. And these programs, along with our room, not to be advertorial, but we keep the cost low, so people, because we know people are going to take time to learn. So this way they can do so without having that financial burden over their head, which really affects your trading performance.
It sure does. I don't think that can be overstated at all. So, getting into market talk here, JJ. Today is September 21st, Fed Day. So we're speaking before what 2 p.m. Eastern, I believe.
Yep.
Probably they're talking. JJ, I don't know if I should feel bad or not about this, but like, I mean, I could care less, honestly. Well, for price action, I do care,
Oh yeah,
because
yeah.
obviously it affects price action, but I don't know half of the shit they're talking about or what it even means.
You
Um,
know,
and perhaps
the
and perhaps it's better that way, right?
for us, because we are pure price action. I had a big debate about this with somebody in the room today, because it at London, before the London Open, inventory corrected, and it actually corrected right down to the tick to one of my levels at 38.65 and bounced off that, and I took the long.
Mhm.
And somebody was like, "Well, it's because Putin said this," and I go, "Listen, man, Inventory corrected, and we took the counter inventory trade because we missed the short. And it was a 10-point trade, right? I don't care what Putin said. I don't mean to sound callous. I know that there's a war and it's all very serious and heavy, and but as a trader, all I care about, it's like I'm crossing the street. If I'm looking at the traffic 2 streets over, I'm going to get hit by a car, you know? So news and all of these sorts of things, now the FOMC is not a news thing. It's an economic event,
Hmm.
which, it has a lot more weight. But even myself, if I'm trading $1 million account or a $5,000 account, I am not going to be trading when he's talking at 2 o'clock, right? That's all it means for me, right? And it means kind of choppy and crappy price action up until the time he starts talking, right? So it's basically FOMC for me is a day off, right? I'm not a macro guy. I mean, I read the Wall Street Journal and Bloomberg, but I don't profess to know what's going to happen with rates and yields and and Libor and all of this sort of stuff and the TED spread. I don't, I don't concern myself with that. I like to know what's going on in markets, but I don't dive too deep into it, because I'm flat every night before the market closes.
Yeah, easier way to sleep that way.
Definitely,
Yeah.
definitely.
I always, and I'm pretty sure I've said this plenty of times on the podcast, but I always thought it was like real neat. I haven't read the book, but I've read snippets of it. It's called Super Forecasting, I believe it's
Oh,
called.
okay.
And then I read one of the award-winning psychologists, Daniel Kahneman. Yeah, he had a book as well,
Oh, yeah, yeah.
and they just talk about how and even your boy Michael Gayed, the space you went on, and when we had him on the podcast, and I'm pretty sure me and him talked about this. Um, that humans are so bad at prediction, JJ, like that
Oh,
that the future is essentially you can't predict the future.
no.
And so trying to trade these things, it's probably foolish. You know what I mean? And maybe there's people
Well,
out there that can do it. I don't know. But it's definitely the
here's
harder
the
way.
thing. Even big fund managers and stuff like that, they will they'll kind of go risk off. They're not going to load the boat with risk before a Fed announcement or anything like that. They have their areas where they're going to be, um, executing. They're trying to build a position or get rid of a position, that kind of thing. But yeah, no, I don't know. Yeah, uh, all of that sort of thing, I'll leave to the fund managers. They're the ones who go and they've got a team of analysts working for them. Um, I'm not a prediction guy. The only time I can predict when something's happening is when I control all the stock, right?
Yeah, right. And
Right.
we're
And
talking.
even then, it's hard.
Even then it's hard. Well, yeah,
Right? Yeah, yeah,
we're talking as retail traders
yeah.
here. You know what I mean? So uh,
And the other thing is you have to have the account. Like if you're trying to build a long-term outlook, and especially if you're trading like futures, you've got to have the capital to put up the money
yeah,
to hold those positions and know how to manage the risk around those positions,
right.
right? So that's not for everyone.
It's no, it's not. And you was mentioning like the hedge fund, like they got a whole team of people. Uh,
Yeah.
they got a ton of capital. Maybe they're privy to some knowledge. I'm sure they're privy to some knowledge that we're not privy to.
Yes, nudge, nudge, wink, wink. We won't, really go down that tinfoil hat road. But,
Right. So it's a
but
whole different
yeah,
game. It's a whole
it's a.
different ball game they're playing.
Oh yeah, that's different. It's like I tell people. I mean, am I going to be playing middle linebacker for the Bears on Sunday? Probably not. So should I be trading like like Steve Cohen tomorrow? Probably not. He's got 30 years of experience and, $10 billion in assets under management, for example, right? It's a different game, you know. Um, a lot of people have trouble trading their skill level, right? Admitting that you're at, level one, level two, and there's nothing that can humble you more than a market, and tell you you're not at the skill level that you think you are.
Mm,
That happens quick, you know.
yeah.
It's happened to me, definitely. It's one of those things that happen pretty quick. You get humbled pretty quickly.
Oh yeah. Oh yeah. We've all been there.
Yeah.
JJ, if the Bears keep playing the way they played on Sunday, they actually might be giving you a phone call.
Really that bad? Oh man.
Yeah, yeah. I think Hakeem Nicks has showed him some tape from Regina.
Oh, really?
Yeah. But no, it's funny. Speaking of the Bears, not the sidebar of this, but they the players announce like where they're from, like college, and he always says Saskatchewan or is that the college, whatever, wherever he played, he says it
Yeah,
like,
University of Regina Rams. Yeah.
yeah, he says that. He'd be like Hakeem Nicks, Regina. I'm like, oh shit, okay. JJ wasn't
Yeah,
born
he,
in.
he's
Yeah,
he's he's the pride. He's the pride of the Regina Rams. That's for sure.
that's cool. That's cool. So, JJ, I can't remember exactly where we were on the SPY the last market update podcast we did, but if I'm am remembering correctly, I think we were missed kind of like those like 4 or 5 days where we were, moving upward, trending up a little bit. We pulled back a little, pulled back some.
Hmm.
Um, what have your observations been? Anything new, really?
It's been a momentum traders market, brother.
Mm,
You know, and it's just going to be that way. Um, I think it's going to be a volatile fall. You know, I think it's going to be a volatile fall, and um, I think people are. It's hard for people to change and trade when markets change up, and so that's what we keep pushing people to, like, okay, you think that this is going to happen, but is the market confirming what you're saying, right? And if it's not, one of the hardest things I've had to do is trade against my bias. That took me years to figure out how to do, because I'd be biased, and then if the market's telling you that your bias is not working, you got to trade against that. And for some people, that's very, very hard to do. I knew for myself it was hard to learn how to do that. Um, and with these ranges, especially with the yes, you really cannot afford to be wrong. Because when the thing trades from 38.50 all the way up to 39.25 in one day, man, it can get ugly real quick. You know,
yeah,
and
yeah,
then back down the next day. It's like a penny stock with huge ranges and bigger players.
yeah. Well, one thing I've been doing a little bit more recently is like starting with a smaller size. Um, kind of putting like a feeler on and then adding in if like my thesis is correct.
Yep,
Um,
exactly.
because if you're going in full right away and you're wrong, it,
Ouch.
yeah, it can hurt. Uh,
Well, that's what pro traders do. They manage their risk with size,
yeah, yeah,
right? Which
exactly.
is, you're doing exactly what you're supposed to be doing as a professional.
Yeah, yeah. So that's been an area I've been, I guess, adjusting slash working on too as well, and which I kind of like. Getting a little more comfortable doing it. Another thing I've been doing, JJ, and you got to tell me how you've been handling this, or the trader, the good traders in the room are. I've been learning to trade the edges a little bit better, because we'll get these like economic events, um, or whatever else news catalysts we got during the week, but it's creating for like a lot of choppy price
Oh,
action during the day. And so like I more prefer, shorting these breakouts or like these
yep.
breakdowns or whatever, but just not really getting much of them popping up. And so kind of had to, adjust a little bit, or maybe I had this played in my playbook of trading a little bit more of the edges. What have you guys been doing?
The same. Really, really taking less trades. And the A plus setup. Which I learned from the equity room with you guys. Because when I started retail trading and people would say, "What's your setup?" and I'm like, um, the FBI agent posing as a fund manager. That's my favorite setup.
Yeah.
I was like, "What do you mean setup? You don't get away from me. What are you, a narc?" So now because retail traders have these setups, and so
Yeah.
I learned how to think like that. Is this a trade that statistically over a period of time proved itself to be good given the order flow? And that it took me a lot of discipline to learn that, and how to try and teach that to people, so they're not just trading kind of blindly. It's like they got a blindfold on and they're trying to hit the punching bag. Um, so yeah, definitely focusing on those A plus setups are, it takes a while, and takes a while to figure out what those A plus setups are and if they work for you,
Mm.
like for you, right? So yeah, I've been telling people to size down when they don't, especially if they can't figure out what the hell's going on. Size down, don't boredom trade. and really try and trade from the edges.
Yep.
Yeah.
Yeah. Yeah. And I like the one thing I do like, maybe I'm not getting like as big as gains, trading the edges of the range, but I want to say a lot of times it's more probable, right? Like, okay, we're going to reject here. It's a high probability. You take what you can get off of it, and live to see another trade. Um,
Yeah. Oh
and
yeah. Yeah.
just add in that, and which is good. I think just add in like we're talking about playbook. Okay, now I got a new play for my playbook. Um, when we get into conditions like that, and it's good. We just keep adding as we go along.
Yeah.
And getting different conditions.
And also learning when not to trade is one of the hardest things.
It
Right.
sure is, man. So I'm,
Oof.
I'm sitting here like we're talking about today, right? The FOMC day,
Yeah.
and I'm sitting here twiddling my thumbs,
Yep.
just staring at the screen, and it's like I think that's probably one of the things that eats at me, JJ, just sitting here doing nothing
Oh,
and doing nothing, and I'm like,
sitting and not trading is the hardest thing for retail traders because most people get into retail trading because they want to, they're self-starters, they're type A personality people. They want to take they want to take the future in their hands and all of that. And for you to sit there and not do anything is hard, is really, really hard. And like that's one thing I like about living in London because I get to trade that London Open and that Globex and make some money like today, like I'm not going to trade now.
mm,
I made my money before the RTH Open, and I'm content to just kind of chill and wait till that the craziness subsides.
yeah, yeah,
You know.
absolutely. It's vital. It's very
Oh
vital
yeah.
because the boredom trading they'll just drain, slow leak the account, and we don't.
Oh God, yeah. It's horrendous. Like you go long, you get stopped out. You go short, you get stopped out. And then people turn around and then they start getting mad and they start revenge trading, and oh my God, then that just nothing good comes from that.
Yeah, yeah,
Yeah.
nothing good, nothing good. So JJ, you mentioned this fall, you think the volatility is going to continue.
Yep.
Um, yeah, so I guess kind of more or less of the same going into the new year. You're thinking?
I I think so. I think so because we talked to Michael and guy and he was I was like, how much more Apple could these people buy? Right? Like seriously, I mean, BlackRock owns what, 1 billion shares of Apple. Fidel, some of these companies, the holdings, like, you know, they've got so much. They've got Apple coming out their nose. Vanguard's got 1.2 billion shares. BlackRock's got 1 billion, and Buffett's got 900 million shares. They're full, you know, and they're holding it for 20 or 30 years. So a lot of these big companies, you don't have a lot of initiative buying. Maybe if the stock gets cut in half, people will add, right? But it's so right now we're in the when there's a vacuum in markets, right? It's like those momentum traders, they come in there. It's like you throw a bunch of chum in the water and the sharks come,
Mhm.
right?
Yeah.
And they're taking advantage of the fact that these markets don't have a shock absorber, so they have huge ranges. So these guys can pile in, buy their inventory at a certain price and then shut off the selling and sell it 20 points higher, in a day. If you're trading 5,000, 10,000 E-mini contracts, you know, and you're selling those all the way up on, scaling them out, these guys are making some serious money and they're using a lot of credit to trade with too.
hmm Yeah. When you were talking with Michael, I believe you guys were kind of discussing how like the real large money managers are not putting much capital to use that were more, it may be contributing to the volatilities, maybe some of these like smaller hedge funds
Oh yeah.
or short-term players playing this.
Yeah,
Now,
definitely.
now let's say this, JJ. What would you be looking for to know that we now the big money is starting to enter into the market? And I realize this could be like a while
I
or
I have
whatever. We don't know, but what would we
smaller
be looking
ranges.
for? Smaller ranges?
Smaller
Yeah.
ranges. Because I was asking Michael, how the hell do you buy size in a 90, 100 point range, right?
Yeah.
It's so hard. And, for these guys, they go in to buy 5 million shares of a stock, they move it, 3%. just with their buy order, right? So that's what I'm looking for. I'm looking for some of that, and then, after this quarter, we'll be look to see those 13Fs and see, what's going on. But I'm not seeing a lot of capital being committed, especially in an interest rate environment that's moving higher. So it's so much speculative money out there. There's so much money out there right now, and so much borrowed money that's being bounced around out here. Um, the lack of liquidity is just. I think there's a huge lack of liquidity. You look at Apple. Apple's only traded 34 billion shares. It's got a float of 16 billion shares, right?
Hmm.
So, like, I mean, if you went to try and sell 100 million shares of Apple today, you know, there'd be some fussing, as one of our buddies in the room would say. It doesn't. It's not a liquid. I mean, if BlackRock needed to sell 10% of their position, right, that would be ugly, right? The stock doesn't trade enough average daily volume to absorb a big seller.
Hmm.
You
Yeah.
know.
Yeah. This is the first year, JJ. I haven't really been seeing too much pet clothing advertised. So I'm like, damn, we must be in some tough times now, man.
People are starting to cut back. Like in England now, people's energy bills are starting to jump.
Yeah.
It's like uh, all that sort of extracurricular free money is starting to dry up. Uh, 400 million dollars on Halloween pet costumes might not be the way to go this year. It's a different. Cheap money makes people do crazy things. You saw people rush into stocks and just buy them blindly and say that they're never going to sell them.
Yeah.
And lose their entire investment. And it's just it's tough to see. I mean, that's the way markets are, but it's tough when this is the first time. This is my first time where we're going into a situation like this where I've been actually talking to retail people,
Mm.
right?
Mm.
And so it's kind of hard to see what people are going through. You know.
Yeah. 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 Tough times. Interesting times. We'll see. We'll see where we go from here.
Yep.
Um, these people with the pet clothing, man, it's somewhat, because I have the husky, JJ, right? So,
Oh yeah.
listeners, I got a husky, and this person asked me the other day, like, oh, like, Halloween's coming up, you're gonna get a costume for Coco. I'm like, it tilts me so much because, like, I'm like, this dog has two coats of fur. I live in
Yeah.
Florida, and you want me to put a dress on the dog? That's cruel. I feel like it's
Oh,
cruel.
I don't get the dress up your pet thing. I know we're gonna get people upset about that, but I don't. I grew up. I had Newfoundlands, and they're like 180 pounds. They're like black Saint Bernards, and you know I just I just can't imagine putting a dog like that in a costume. But
No,
anyway,
no, no, no,
yeah.
no. But hey, if you want to dress up your pet, that's it's cute.
Go
It's
ahead.
fun. I
Don't.
guess. I
We don't
guess
want
so.
the complaint letters.
Yeah, yeah. But I was like looking at this person, like this blasphemy. I'm like, this dog. I already tortured this dog. You know what I mean?
Yeah,
Living in
yeah,
Florida, and you want me to
exactly.
throw some clothes on the dog? Come on.
Yeah, that dog should be pulling a sled in Edmonton.
Yeah, though
You
she
know.
pulls me on the walks, man. It's incredible. Like she does not stop. Like I'm like trying to rein her in. But JJ, I guess anything else? Any other thoughts before we get going here?
Oh man. Just for people out there that are trying to figure this business out and try to make a living, just really do your research and reach out to people who know. Try and try and learn stuff, and not just from those YouTube videos. From some guy standing next to his Lamborghini. Although I'm sure that's starting to fade out now too. Spend some time, do more research on where you're going to put your money, and you know, like they used to say, measure 3 times before you cut once. Just be a little careful out there going into the year end here. And it we're going to change. Things are going to change. We've had a business cycle with low interest rates, and that's coming to an end. We'll see what the hike is like today, but just be a little bit more careful with your money these days. folks. That's my advice.
Well said. And that's going to conclude today's episode of Confessions of a Market Maker. If you guys enjoyed this episode, please rate and review it for us. If you guys would like to get funded, if you guys would like to join a supportive and a professional community of traders, you can join JJ and myself at microefutures.com. So for the gorilla of House Street, I'm Paulie Walnuts. You stop, so.